Okay. Welcome to Forex.Today, the YouTube community of about 20,000 foreign exchange traders just like you and me. My name is Wayne McDonald. I'll be your guide on this journey we call Forex. Today we'll do technical and fundamental analysis with the overriding goal of putting together a trade plan for today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, never risk money cannot afford to lose. So you will notice in the description below the video, there is a link to my book, Strategic and Tactical Forex Trading. There is a link to about an hour and a half worth of free Forex training videos. There's a link to fxbootcamp.com, which is 65 hours of foreign exchange trading videos for $88. And there is also a link to tradersway.com. And if you are benefiting from these daily live streams, it would be appropriate for you to click on that link to tradersway.com, open up a demo account, play some trades, and give Tradersway an opportunity to earn your loyalty and respect like they earned mine. When you're judging a broker, very often what happens is you see an ad, it says, "Hey, we're cheap." And you're like, so you check it out. But if you test them out, truly what you'll find is their advertised spread is cheap, but then you get slipped on your trades because their execution speed is slow. And usually the bigger the broker, the more traders they've stuffed onto one server, it actually makes their latency less desirable. So what you need probably is a boutique foreign exchange trading firm that doesn't have 1 billion people on one server. And instead of the churn and burn model those big boys have, you probably want a broker that looks to you and looks at themselves as, a professional execution relationship where it's symbiotic. They need to provide a high level of quality service because they are supporting your endeavors as that execution partner. And, they see that as a value add. Okay? A value added service. And if you're like, well, that's kind of what I want for my successful Forex trading business. I want sort of a symbiotic relationship as well as some uncommon business ethics for this industry. So anyways, hey man, go to tradersway.com. Give them an opportunity to earn your loyalty and respect like they earned mine. So today, we are going to go through the charts as we always do. I will do my best to answer your questions. Okay. Aaron says, yeah, he is trading in the Dow. Like the Dow, what's interesting about the Dow is, it's the big 30 companies, right? The big 30 American companies. But really, here's the interesting thing about the Dow. I don't look at it as American companies. I look at it as basically a mutual fund of multinational corporations, which is interesting, huh? So there's all kinds of ways you can get exposure to international markets. I say just buy the Dow, which is kind of interesting, huh? So anyways. So here he is. Welcome. Oh, and by the way, I do invite you to become a subscriber of the community. And if you can find a way to tell YouTube that this is quality content, I would appreciate it. Let's take a look at how you address the poll. 52 votes. Okay, not many, but statistically relevant. And by the way, Aaron, so you trade Dow. Why not S&P 500? Okay. And we see not many people interested in gold, not many people interested in oil, which is kind of interesting since oil is up about 8% today. Really? And of course, obviously, most people want dollar. Okay, well, dollar's just waking up. Okay, what we're looking at is when the dollar goes up, that's a risk off. Oh no, I forgot my Epic pen is not working. Hang on, let me try this one more time. Bum 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 ba bum ba 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 ba. Bum ba da 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 da. Bum ba ba. There it is. Okay, and that task. Why didn't I think of this last night? Gee whiz. How you doing, Shungi? Good morning. Good morning. Yeah, okay. That's cool, Aaron. Oh, sure, and I got the drawing tool together. Why didn't I think of that last night? I'm so silly sometimes. Okay. Okay. And if we're looking at a shorter time frame, okay, strong, weak, strong. Which is a little bit of indicative of how I think March is going to be. Oh, and by the way, welcome to March. Okay. So the first thing I'll notice is risk off, risk off, risk off. Okay. That's the first thing I notice. Okay. Makes sense to me, by the way. But this is an on. This move is now on. This is an on. This is an on. So maybe it's just Euro crashing, making these things look good. Isn't that weird? Isn't that weird? Everything in the world is up except Euro. Maybe Euro is just down. Like maybe it's just big. Something right in the world today. I don't know what it is. So if you look at this, Kiwi is stronger than Euro. Swissy is stronger than Euro. CAD is stronger than Euro. Dollar is stronger than Euro. Aussie is stronger than Euro. Norway is stronger than Euro. And Yen is stronger than Euro. That just takes a long time to even say. So I just created my own indice. Okay. Again, I don't know who we are. You have to be specific. Okay. This is fill the gap, continue mission. We're at a technical bottom, but this is a fundamental sell. We Okay, so anyways, just realize that the move has occurred. It's already happened. We're at a weekly projected low for Euro Kiwi. The monthly projected low is around 160. This move started at 174. Interesting, huh? Taking a look at Euro Swissy. Okay. we are more than 2 standard deviations below the mean. Okay, it's interesting, right? So if you look at last year, that was the projected top of 2021 that we knew sort of it when we were in this range. We knew if this was going to be bullish, that's the projected high for 2021. And we nailed it. Oddly, and you won't see this much, I call it a full Monty. I don't even know why, I just do. That is the projected high for a bullish market. And typically the market is either bullish or, right? Bullish or not bullish, bearish or not bearish. It's very rarely in a normal market, both bullish and then check it out. On the last day of the year, we hit the projected low for the year. Once again, this, right, you had this information in this zone here. The bullish high is there, the bullish low is there. We hit them both, and look at, like, really, honestly, perfectly. As perfect as you can. Nearly perfect. This one's nearly perfect. I think this one is actually perfect. Interesting, right? So now if you look at this, you're in the moment, probably a bear. So what do the charts say? This high, because remember, it doesn't tell you if you're a bull or a bear. That's what you need to decide. The algorithm's not going to do that for you. Okay? Once it can decide, it doesn't need you. So you have to decide, who do you want to be boss, you or the algorithm? Well, if the algorithm makes decisions, then you're not adding any value. And you're going to work for a machine one day. Okay. Anyways, that projects this low. So I can look at this chart and say 98. Projected low for the year. Huh! What do you guys think of that? Well, going into a smaller time frame, let's go from daily to hourly. What's the next place? Would you do that if you thought this was going to 98? Okay. For many people, they're not thinking it's going anywhere. They're not thinking, they're just reacting. Okay. Sort of like a paramecium reacting to light. I didn't say rat. I didn't say cockroach. Cockroach? Huh? La cucaracha? No. That would be mean. I'm not mean. I'm a teddy bear. Thing is, what's your plan? Okay. So let's do a poll. Do you think Euro Swissy will hit 0.98 in the next 90 days? Let's be specific. What's up, Casey? You can call me Jojo, by the way. Lately I had the strangest feeling. I heard you call out someone else's name. Less the thought of you around in my mind. I'm a man of many wishes. I hope my premonition misses, or else, but I can't hit the notes. I can't hit a note. I can't go above C. Burn says, missing the option, no freaking clue. Then you need to stop. Collaborate and listen. Cause he always starts to cry. We have 28 votes. I'm waiting for at least 30. You have to have 30 votes for it to be statistically relevant if you want to have a normal distribution. All right, we got 30. That's funny, King. King takes good notes on at least the jokes. Okay. Well, Bern, the reason I say that, there's so many people that have no clue but are trading. I'm like, why are you selling this? My MACD told me to. And I say, shut the... Anyways. All right, so yeah, okay. 2/3 of you say yipper. Okay, cool. So now your process is to put it together technically, or pay attention. If it starts making higher highs and higher lows, you don't engage because that wouldn't help your strategy. Your tactics should match your strategy. Okay? And you need two things to trade Forex. You need strategy and you need money. Right? You got no strategy, got no money, you got no car, and there you are. No, how's it go? You got no money, you got no car, you got no woman, and there you are. I think that was either Confucius or Buddha. I'm not sure who said that. Oh, interesting. Unorthodox says it's a mistrade and unsellable. We could take a look at that. Busted out. Okay. I don't know about that. We're not on a key level of technical support. Like even if I go out weekly, maybe. No, I mean, sort of. We're getting there, but I don't think it's missed. I think this issue here is probably parity. Okay. So a missed trade? Well, not technically. For example, just on the last 4 hours, you had a retest sell. Okay, look, it's trapped, it broke. So look at just in the last, really it's 8 hours. Okay, we broke. You can see the wick here. And then how did we get here? Okay, let's see. That's as close as I can get this chart here. And let me make a thinner marker and let's do arrows. Okay, so it opened here, went up, then came down to the open price, went low, and then pulled back and closed there. That's 4 hours worth of price action. And presumably, this here kind of, near the end of the 4 hours. So really, if you start from this as a starting point, it went up, closed here, went right, opened here, went up, 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 hit the resistance, which is quite obvious. And then what did it do from there? Came back down to the opening price, down, 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 and is closed. So in the day trading group, I teach people to trade inside the wicks. And that's a great example of that, where, right, this ended up being a breakout, pullback, gone. So I wouldn't say like, is it a mistrade? Well, you certainly could have traded that, and that's a 4-hour chart. It's probably more obvious on a 1 hour. Yeah, see that? Cool. So that trade has happened, but that's what you should have done in the London session. Oh, faux show. Okay. So unorthodox, I wouldn't say it's missed, because now you have to day trade it. And the interesting thing about day trading is, we're kind of just going to do the same thing as that now. There's tomorrow's trade. All right. So let's say we'll get some down, then we'll get some up, and then we'll get some down. That's tomorrow's trade. Well, Sad says, hey, I haven't researched it on it fundamentally. Well, there's two things you need to think of. Here's Switzerland and here's Europe. Okay? Europe and Switzerland do a lot of business together. Okay? That's one thing. The second thing is Swiss bank accounts. Okay? It's a banking haven. So, when things are good, you spend your money, which means you withdraw money. Okay, so let's make this, let me do it this way. Let's make this the country of Switzerland. Okay? And they have clients from all over the world. Okay? So, when times are good, those clients want to spend money. So they take money out of their Swiss bank accounts. Okay? Either that or they're buying cuckoo clocks or Rolexes, which means they spend the money, but it stays in Switzerland. Okay? This is a French watch made in Switzerland. And I'm like, well, why is it French then? So anyways, weird. Anyways, Swiss bank account. Okay, so when times are good, we say you want to take money out of the market, out of your bank account, either spend it or invest it. Now, if you're investing it, you're taking on risk in exchange for reward. So now let's do it this way. Let's kind of erase that. You have to remember this is Switzerland. You're in your Swiss vault. Okay, so you have risk and you have reward. Okay, even if you're spending the money, you're making a decision. Okay, and the reward is greater than the risk. Even spending it. See, if you're fearful, like you don't think you're going to be able to pay your mortgage, you don't go out and buy expensive watches. But when you're like, man, I got money making money, so therefore the money I got's free money, and therefore you can go buy stuff. So when you're looking for reward, you're actually looking for return on investment. So in a situation where you're like, I got this money, but I'd rather have, right, money earning zero or money earning return. Well, the only reason you're earning return is you're taking on risk, and that's why we say risk on. So that's money leaving Switzerland. And when Swiss francs are leaving the country, it weakens the Swiss franc. So when things are right as rain, Swissy is weak. Now, something bad in the world happens, and it freaks people out. And they're like, oh my God, that's bad for business. That's bad for investment. It's just bad. So when things are bad now, the flow of capital changes. They get out of whatever investment was promising a return on investment, and they bring the money back and stuff it into the vaults at their Swiss bank account. Okay? And that brings money back to Switzerland. All these people are buying Swiss franc and shoving it in their vault. Okay? So, somebody said fundamentally they're not sure about this trade. Well, think about it now. Okay? Okay, we got the Russian situation. Europe is negatively affected. One way you can look at it is European growth now expected to decline. You can look at that as, for example, like GDP. Okay? So that means ROI down, okay, which means you should probably divest, not invest, divest. Go to cash, but you don't want your cash in euro, so you're going to shove it in your Swiss bank account. And that's what this is. So fundamentally, I want you to think of the flow or even flight of capital. People are divesting out of Europe and shoving the cash into the vault. Okay? In Zurich. What a great town, by the way, Zurich. Every time my daughter makes a cup of hot chocolate, I'm like, I know the shop in Zurich that makes the best hot chocolate in the entire world. She's like, yes, Dad. I'm like, I want to take you there. It's down by the river in the old town. It's epic. It's not very big. How do we know how long risk off will last? You don't. You don't. Now, there's two things that you can kind of estimate. Okay. Is it exogenous? N-O. Okay. Or is it seasonal? And if you don't know what exogenous means, let me use a different word. Is it a shock? How would you describe the current situation, right? Like, let's say you don't know anything about seasonality, but you believe that that's based on Russia, the Russian attack of the Ukraine. Then what you're asking, like, how long will it last? As long as people are fearful of the situation in the Ukraine killing growth in Europe and divesting. So your question would be, when do things settle down? Okay? And going back to Sad's question, once it settles down, you might want to use technical analysis to technically track the flow of capital back to Europe because A, much of the risk has been removed, or B, prices are just so tempting. You're like, the stock that you want to buy is now half price. And you're like, oh my God, I want to buy that because it's such a great value right now. And you believe in the long run, this problem will go away and you will double your money at least because it'll go back to what it was worth. Cool. So you're asking a behavioral finance question. How long will the situation occur in the Ukraine? Or when will the opportunity be greater than the risk and suck money back towards Europe? Well, I don't know. Okay. I don't know. Okay. But that's why we're analysts. Okay. So the strategy would be look to get back in when things stabilize, right? Let's say said. Well, when will they stabilize? Well, when the worst of the war is over, or we get used to it and bored with it and nobody cares. Okay? And by the way, it happens. Do you remember Syria? I used to hear about it every day until Americans got bored with it. Something else got more interesting. And I'm like, I'm pretty sure it still sucks to live in Syria. Okay? So, right? So, or the opportunity is just so good. So the risk has to go away or the reward has to get better. So now as technicians, you might want to look at this on a daily basis for a while. And oops, that's way too big. So you might observe something like this for the next little while. Okay. And at some point you're like, okay, because you're analyzing this, right? So this is sort of like bearish, 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 bearish. Okay, a little bit bullish. Nope, nope, nope. The big trend takes over again, right? A little bit green, red, red, and then maybe some sort of change in here. Maybe. That's what this is suggesting. Maybe, but you don't know. Oh, COVID is over, except in California. Okay. But even in New York City, you can go to a rock concert now and not be required to wear a mask or even show proof of vaccination. So when I was in New York City, what was it, a month ago? An old FX boot camper, good friend of mine, basically I would consider him like an ambassador to to New York City. Anyways, I'm like, hey man, I'm in town. Let's have a lunch. And he's like, cool. I'll meet you in the city because he lives just outside the city. But he's like, it's hard to get into places in the city when you're not vaccinated. And he's like, I'm not vaxxed. I'm like, okay, well, so he called up the Harvard Club and he's like, hey, can I come into the Harvard Club as a, you have a member staying there and I'm a guest. Can I come in as a guest when I'm not vaccinated? And they're like, F you. Screw you is what they told him. So anyways, so that was just a month ago where you couldn't even step foot in the Harvard Club unless you had proof. Like you have to pull it out. Proof. Here's my vaccination card. Okay. Reginald says, who's held accountable for COVID? Well, I suppose there's three players. Okay? God, Mother Nature, or the Chinese. So you can pick one. So anyways, unorthodox is sad. Well, all of those restrictions have been removed right now. Okay? I think as of yesterday, okay, Greg's blaming Canada for COVID. When in doubt, right? When in doubt, blame Trudeau. Where do you live, Unorthodox? Made as China flu? Yeah, all right. So, by the way, just so you know, the Spanish flu of 1917, okay, the Spanish flu of 1917, we now just call influenza. We still have it. We still have it. It's the same thing. That's, okay. All the boys stuck in the Somme in World War I in close quarters with each other, right? From all over the world, shared all their germs with each other, and this whole thing got batched together and created something called the Spanish flu. Reginald says your sarcasm is intellectually organized. I appreciate that, Reginald. That's one of the best compliments I've had in a very long time. Thank you. Okay, so anyways, there you go. So that's worth 400 or 500 pips. That's cool. I put together a trade plan last night in the day trading group worth 700 pips. And I'm like, what do you guys think of that? And I went, bullshit. I'm like, it's hard to believe, right? It's hard to believe. You can't believe it now. Here's the thing, though. Let's go back to this. The first quarter, I expect kind of like this to happen in the first quarter. So once you're sitting there, now imagine this on a 15-minute chart, that you do this for 90 days. 90 days, almost 100 days of mediocre trading results. So what do you think is going to happen the next 90 days as a human? Well, we see the pattern, right? And you're like, man, this choppiness sucks. Okay? Now, what you don't see is the next 90 days. So this is 90 days of crap. So now we have new 90 days, which will look more like this. Maybe not for this pair, but just, I'm saying, a trend one way or the other. And you can't see that. Well, Reginald says, here to learn. Well, I live in the southern part of the United States, and if you want organized sarcasm with sort of intellectualness to it, the Southerners are really great at giving you a compliment, but it's actually a slight. Oh, bless your heart means you're an idiot, right? So anyways, the Southerners are really good at, giving you a compliment at the same time stabbing you in the back. Welcome to the South. It's just part of the culture. No one will insult you to your face, but they'll do it with a compliment, which is awesome. Okay? Greg just loves the people down south. So, okay, so you can't see this coming, or you probably don't see it coming, and you're going through this now. So, like I said last night, I outlined a 700 pip plan. Now it's going to take some time, of course, but I'm looking 90 days in advance. And very often, what happens is you get caught. It's not a weakness. You're not wrong. This is what has happened. And as humans, we see the pattern now, and it's difficult to predict anything other than the pattern. Okay. So when I say this could drop 500 pips, it's like, well, you remember all of this nonsense, right? And it's hard to see that. Okay. But it's your job to look forward as much as possible. So anyways, euro's coming down. Really? Okay, let's do some my WTI. Okay. Nobody here wants to trade oil. What was it, 5%? 5% of you were interested in oil. We were at 95. And now we're at, 102 and a half. Okay. Okay. One contract, correct me if I'm wrong, but that's $7,000, isn't it? Or one mini is $700. Is that right? And 95% of you are not interested. It's kind of interesting, huh? I'm on peso right now. I traded peso yesterday. If you want to do peso, I can switch over. It's my trade, it's now or never. I want euro never. All right, so we can, let's do monthly maybe. So I sold it, got to change color here. I sold it here. The second one. Do 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 do. Do 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 do. Okay. So I'm going neutral. So the issue, okay, man, abitur. Man, abitur. I thought it was amateur, which is cool too. Here's the thing. Okay, let's look at the month of March. Maybe I go blank on this. Let's just go blank. It's so confusing, right? Okay. Let's say this is the month of March, and I'll pick sort of, I don't care what currency, sort of like XXX USD. Okay. All right. This is what I think is going to happen. So I'm in a transitional period, okay, man, where this is the last month of the first quarter, and I believe there's going to be a changing of the guard of flow of capital. So I'm divesting out of the last 90 days worth of trades in anticipation of investing into the next 90 days. So normally I would, I'm calling the herd, I'm thinning the portfolio. I'm not allocating, really, not yet. But in 2 or 3 weeks, I'll be reallocating into the new strategy. Is that fair? JR, a lot size contract calculation. Do you mean how much you should be risking on a trade? It's my trade, it's now or never. I'm not gonna hold forever. I tried to buy it El Moro, I tried to buy it yesterday and my E-Trade account denied the trade. Well, for majors, it doesn't really matter, JR. So I don't want to get into it. It's sort of it's a bit off topic, but the idea is I don't know how many trades you make per day, but take the number. Oops. The way I think of it, just briefly, is take the number of trades you make. Trades, okay, per day. Okay, and then calculate the average stop size. Okay, so stop pip times stop pips, whatever, right? And then say every single losing trade you made. Let's say every day for a month you lost every trade. Yeah, okay, so that's going to be different, right? A commodity is going to be bigger, and there's more expenses to that. That's true. The answer is small as possible, JR. But anyways, so for example, 3 trades a day times 33 pips is equal, let's just say 100 pips a day. I know it's 99, right? Great. So 100 pips per day times 20 days, that's 2,000 pips lost. That's how much you're risking. So let's say every single trade was a loser over the entire month, you lost 2,000 pips. You see the logic here? So now the question is, what percentage loss do you want that to be recorded on your track record? Okay. Well, Greg, this is the logic. I want somebody to think this, and then they can do the math themselves. Okay. What percentage of loss do you want that to be? So let's right? Okay. So if that's a $2,000 loss on a $100,000 account, that's a drawdown of 2%. Okay. So what does that mean? 1 mini. And you're like, holy shit, Wayne, I'm trading like 5 minis right now and I only got 5K. All right, well, you're a degenerate gambler. You're going to blow up your trading account in one bad month. Or you'll have one, bad month and you'll lose 40 or 50%. Okay? You are uninvestable. So you will stay small forever. It sucks, right? Totally sucks. I know. But you should be focused on not ROI, but growth. Okay? Think about it, guys. In a normal year, going back 50 years, the stock market averages 8%. But what that average actually means is it's either 15% or negative 15%. So what if just every single year you produced a 20% return because your lot sizes are small, but you're very consistent and you're able to react because you're in a liquid market. You're able to react to things like business cycles. You can buy euro in a rally. You can sell euro in a decline. And you're pretty good at predicting these things. You never get into any trouble. A negative 1% is a bad month. Your average percent is probably 2%. And you're, and just whatever. and you're just very, very consistent. Meanwhile, the stock market will be up 15%, 15%, 15%, down 20, up 15, down 20, up 8, okay? But you're consistently outperforming the stock market, and you have lower volatility in your portfolio, you will attract money. Okay? So that's what I'd rather you guys focus on. Instead of getting rich quick, you focus on your track record. In particular, a Sharpe ratio above 1. I think if you could do a 1.5 Sharpe ratio over a long period of time, you will have a business. You will be able to provide your foreign exchange trading services to customers, and you will attract customers. Matrix says, so why does TraderWay offer an account for $10? A lot of people don't like demos. It's not real if there's no money in it. Whatever, dude. So people want that. So that's why they would do it. Okay? So Matrix, would a business offer a product or a service that people don't want or ask for? No. I don't understand why people drink pumpkin spice lattes. Okay. Now, Sad says, what do you mean by Sharpe ratio? Well, there's many different calculations. There's different Sharpes, but this is by Bill Sharpe, who won a Nobel Prize. Okay. And it's called risk adjusted returns is what it is. And you might want to look at, let's say, okay, the return of your portfolio over the volatility. Unorthodox, I don't know what I don't know. So you want low volatility and consistent returns is all I'm saying. Because you have to understand reward is a function of risk. And risk is bad. So the thing is, you want a return, but you don't want risk. But you have to take risk to get a reward. So you have to then say, of the reward, are you being compensated enough for the risk? And that's a Sharpe ratio. So you might be profitable, but you might be taking too much risk to get profitability. So it leads to a couple of things, but the best way to understand it, okay, is let's make up a number, a year. January, February, March, April, May, June, July, August, September, October, November, December. Okay? Okay. Okay. -1, -1, -1, -1, -1, -1, -1, -1, -1, -1, -1, plus 25. How do you know they're going to be profitable next year? They're profitable this year. They can say, look, we made a lot of money in the last 12 months. Would you like to invest? Do you understand the thought process now? Hey, we made a lot of money. Do you want to invest? It doesn't address the concern of risk, does it? How would you know next year you were going to make money? See, if you were going to analyze this, let's say on this day they pitched you, you would see a ginormous loss, and there's no way you would invest. So it's sort of like a random sampling. If you pull this out, there's a high probability of that was luck. Or even worse, they loaded the boat and gambled the money. They're like, okay, boys, we're down to $10,000. I want a trading idea and I want it now. And a trader comes in. Let's put the whole wad on gold leveraged, which means if we're wrong, we're going to go to zero, blow up the entire trading account, or we're going to make 25%. And we'll do it quick. So they leverage the whole thing, gamble it, and knock out a plus 25. And they're like, hey, do you want to invest? We have a 14% return last year. Well, if you just looked at the absolute return, my mouse isn't working. Okay. If you look at the absolute return, okay, 14. But you had to go negative 11 to get the plus 12. Okay. So you got, so risk adjusted, okay, there's more of a formula than this, but it's a basic one. So you got 14, okay, over a negative 11. Okay, and even that is not quite right, because then often what you do is you can do absolute return. Let's do it this way. You could do the return risk adjusted is total return. So it'd be, hang on, I don't know why I keep doing this backwards. Okay, return total minus, okay, risk free, okay, which would be the yield on the 10-year T-note, okay, over, let's say, a basic measure of volatility. Okay. So if you got like, so for example, because that's a typical way of looking at it, this is your opportunity cost. You could have just bought the 10-year T-note and earned 2%, right? So that's easy. So you have to remove that from the return, the absolute return or risk-adjusted return. So now you would do, so let's say now it's 12 over 11, but it's negative 11 and all that kind of stuff. And then there's different ways to calculate the volatility and all that kind of stuff. So I don't want to get into it, but bottom line is I went through 3,000 signals that are available on I guess MetaTrader, MetaTrader, I guess, whatever it is, 3,000 of them. And there was basically, I mean, I think it might have been totally not one strategy that compensated for the reward that your account took. Not even one. Let me say that again. Out of like 3,000 signals you can copy on your MetaTrader platform, not one of them produced a return that compensated you for the risk. JR says, have you thought about doing a session on algorithmic trading? And if so, can you discuss whether you have any experience with it? I completed the algorithmic trading program at Oxford University in England. And but from an investment management and an investment allocation point of view. Now, Ryan, also part of FX Bootcamp, has spent, I think, the last 2.5 years learning like deep algorithmic programming. You know, starting obviously with Python, but then deep dive into many, many, many other aspects of artificial intelligence in designing algos. So he would be on that side. My side was, as an investor, how to analyze the performance of algos, not programming Python. Michael says, what is the right strategy if 3,000 people get it wrong? It's easy. Okay? Okay? Smaller losses, bigger wins. So, if every single trade you took, let's say, had a 100 pip loss and a 300 pip win, if 66% of your trades are losers, how much money have you lost? You risk 100 to make 300. 66% of the time you're wrong. 33% of the time you're right. How much money have you lost? Nothing. This is where people's minds explode. You're like, oh my God. So Michael, what if you put a little more thought into the trading, a little more strategy, a little bit of analysis of global macroeconomics and monetary policy and some seasonality and business cycle understanding, and on top of that, you're kick ass at technical analysis? Could you improve this from negative 66% winners, right? 66% losers? Could you possibly, let's just say, get this to 50% losers? Matrix says, my thoughts on any account under $1,000 like Fool Gold. Well, look, that's going to be normal in the history of the entire world. That has nothing to do with like a Forex or a Forex broker. So going back to this, do you guys think you can get that to 50%? Michael says, well, not easy, but probably. Okay, then now you're profitable. And this is actually what I'm trying to teach you. I'm not trying to teach you how to get rich quick. I'm trying to teach you that I'm looking 90 plus days in advance in my analysis of the Forex market. Why? Well, I'd like to hold trades for longer. Okay? And then you're like, well, to have a 100 pip stop point, I'd have to cut my lot size. I know, right? Because I just explained to you one mini lot on a $100,000 account. But you know what? I've been teaching that methodology since 2008. I think I did a presentation in Toronto for my fund, not for FX Boot Camp, and I outlined it at this investor conference, and I was explaining the math of one mini lot per $100,000 in cash in the account. And you're like, holy schnapps, that's tiny. Okay, well, if I have, okay, like I just outlined, 60 trades in a row, right? 2,000 pip loss. The account is never in trouble. If I made one loser after another loser at another loser using the math, 33 pips a day, so times 3 trades a day, that's 100 pips a day, times 20 trades, so that's 2,000. Okay, easy math. But here's the thing. You're like, okay, that's a tiny loss. Okay, great. But when there's winners, I can add to the winners. Okay, with winners, see, okay, if I am buying in a situation like this, okay, I'm not going to lose, and it's going to be add another trade, right? This is a buy, let's say down here, add another, add another, add another, add another. Okay? And all of a sudden you get this one and you get your plus 300. Sweet. Dude, that's a 10 to 1. Okay? 10 to 1. Okay? Which means $100 of cash will produce a $1,000 return. 1,000. Let's say this is 900, 800, 700, 600. Okay? Probably produce a 3.5% return. Okay? If it goes up for the month and then comes out and you cash out and you're done, done, done. Okay? But that's, you notice though, that's only 5 trades for a 3.5% return versus 20 trades lost to have a 2% loss. And it's entirely possible to get the up, and it's unthinkable to have the down. So you could say now there's a probability of 1% and maybe not, and then you could probably say there's a 25% chance of at least 1% win, and right, or whatever. You start. Whatever. Small losers, big winners. Try not to suck. Okay? This is where you're going to lose most of your money if this was like a daily chart. Okay? Of course, that's a 5-minute. Okay, so I sold right here yesterday. Burns says, isn't March generally bad for peso? Well, this is a central pivot, so okay, at least I'm at resistance. The second thing is it's a remittance trade. So Bernd, you can look at this and say, my favorite trade is the monthly M3 in early in the month. Okay? Let's say I had a general idea of something like this. Okay? Cool. So let's go explore the peso. I'm going to go template monthly. No, I'm going to do I have day trading? No. Pivot points, weekly, confluence. I don't want that. Position trading, bearish bias. Okay, let's do that one. I'll go to an hourly chart. No, a 4-hour chart. Okay. There's the monthly M3 early in the month. Okay. There's the monthly M3 early in the month. There's the monthly M3 early in the month. And there's the M3 early in the month. And you're saying to me, Wayne, that's not perfect. Sorry. Yeah, I'm sorry, dude. You're right. It's not perfect. My bad. Burns says, so looking for shorts would be more profitable? I don't know. I'm just going to tell you what I do, what I look for. Okay? Don't get in a situation of like, what's Wayne doing? Who cares? Okay? You need to figure out what you want to do. Trade Mexican peso and why it works. This is where, let's see. All right. Cool. So I taught you guys this 6 years ago for the 100th time. I did it 6 years ago. Even back then, I did it for the 100th time. So I can just plop that down there. And you can see that I have some logic to it. Okay.
And it was always sort of like the last couple of days of the month or the first couple of days of the month, just kind of in that area, sort of last week, first week kind of time period for at least a few days. But some.
Okay. I'm like, oh my God. Oh my God. So if you'd known that 6 years ago, you'd know where I'm talking from, right? Now, Mike says also trade at the right time. Yes. And we, in the day trading and swing trading groups, we spend a lot of time on timing. Okay. Well, what you'll see in the video, right? Burns says, I was looking back 3 years ago at what peso does on average per month, which is almost, I mean, it's a bit of seasonality, but what it does on average is irrelevant. It's more like when and why. Okay? Patrick, you can ask anything you want. So Patrick, how about this? I was a speaker in the China Forex Expo several years ago, and I was invited to speak on a panel, but it was like the last event of the day. And very rudely, all the other panelists were like, they were sponsors and all that, and they got on because they had spent money and whatever. They were done with the booth. They were done with their networking. I think they were just burnt out, so I think they just all went to the bar. So it comes up to 1 minute before the event is about to start, and there's hundreds of people in front of the stage ready for the panel discussion. And the producer comes up freaking out. Nobody else is here. Just you. The other 5 people are not here. I said, don't worry about it. There's a saying that we have in America. The show must go on. I said, oh, let's do this. My friend here knows me very, very well. And he speaks Chinese because he's Chinese. So I'll tell you what. Here's what we're going to do. Give us a mic each, and we're going to sit down in the chairs. And for as long as necessary, we will sit here and I'll answer any question from the audience about binary options, about Forex, about futures, about stock markets, about bond markets, about macroeconomics. I don't care. I'll sit here, I'll field questions from the audience. I'll sit for 2 hours if necessary, and I'll just answer every single question the audience has. Imagine that. That's ballsy, huh? Like, there ain't nothing you can ask me that I haven't answered before, right? So yeah, bring it on, Patty. By the way, that was great. That was totally great. Let's go back to commodities. Adam says, are you considering the strengthening of the yen due to the end of the fiscal year despite the Russian-Ukrainian war? No. Adam, it's not despite. If anything, it produces the strength early. Okay. Look at that. See, told you. You guys were not interested in oil. Look at that. Not interested in oil, huh? All right. Your call. Patrick, what do you have, like a Word document you're pasting? Sorry. There is a limit of 10,000 characters, I think. All right, here's our biddy. Okay. How lovely, huh? Okay, just kind of climbing the ladder here. think we were doing this yesterday, right? Monday. I said this is the bottom, this is the middle, and this is the top, the top resistance that we need to break. Okay? Busted through. We go from a bearish market to a bullish market, sort of bottom, back to resistance, higher low, higher high. Can I connect the bottoms, higher high, all that kind of stuff. So off we go. Yeah, so on one of the things we had discussed earlier. Oh, and by the way, remember I was doing the inverse head and shoulders? Remember? I was saying that was kind of what was happening maybe. All right. This is a change. And we talked about it last week, just so you know. From a highly correlated asset class, risk on, risk off, to suddenly Russian exit of ruble. Ruble. Rubble. I think your question is, what do I think could end? Yeah, so yeah, we're probably like a worldwide conflict. It's not really a worldwide conflict. So let me say it differently. Of all the European countries, name a country that has a reasonably smaller economy relative to, so like the big economies in Europe are France and Germany, right? What are some of the smaller ones? Don't say Liechtenstein, stuff like, obviously it's, well, let me just say it, right? Let me just say it. Okay, Italy has a smaller economy than many of the other European economies, right? Yeah, I didn't say Eastern European. Okay. Okay. Italy has a $1.8 trillion GDP. Okay. Less than half of Germany. Okay. Okay. The entire Russian economy GDP is 1.4 trillion. Okay. Italy is a bigger economy than Russia. So it's not really a global conflict. Okay? Russia could disappear and Germany will suffer because it made poor decisions based on its energy security. But within let's say 5 or 10 years, it could totally redesign its energy dependence and supply chain, and it wouldn't be a problem anymore. Okay. Considering so Russia's the largest country in the world. It has something like 12 time zones. It's been blessed with nearly unlimited natural resources. And socialist pig dogma has led to a pathetic return. It's pathetic that the largest country in the world with hundreds of millions of people with unlimited natural resources, it's pathetic that the productivity of that economy is 1.4 trillion. It's embarrassing. But that's what socialism leads to. It's terrible. If it doubled, it would be pathetic if it's doubled, right? A $3 trillion economy for Russia would be pathetic. It's probably, I would say, probably should be on order about, well, I don't know, let's say 8 trillion. It should be double Germany. It's huge. But then again, why is it that Italians don't buy Russian cars? Why is it that rich Russians buy German G-Wagons? Okay? Russia should be more productive in making luxurious cars. But that's a capitalist point of view. So there's still a lot of socialist pigdogness there. There's also, okay, savings should equal investment. Okay? And investment should be greater than depreciation. And then, therefore, GDP would be rising. Okay? So, if you're going to save, there has to be productivity on a worker's side. On microeconomics, productivity should be high because your per unit cost falls, which means, okay, you have more than what you need. You're not working to turn the lights, keep the power on in your apartment. You're saving to invest so you can buy your own home. There's a difference. Okay, you're not just working to earn income to pay your rent, pay your cable bill, put food in the fridge, and then you're out of money. And all you got is an apartment, a fridge with some food, and a TV, and you go to work to pay for that, to go to work to pay for that, to go to work to pay for that, and then you die poor. If your productivity is higher than, let's say, right, that lowers inflation because prices per unit fall, and you have excess. You have more than you need, so then you save. That savings gets turned into investment. Investment turns into, okay, why is your productivity high? Because you're earning a return on an investment. You save and you invest. And then if your investing is higher than depreciation, you get growth. And growth leads to excess. Not from printing money, but because you are producing more. So when you have Japan has no natural resources left, so it has to spend its savings Not right. It can't invest per se. Savings goes to importing energy. So the sad thing is the largest economy in the world, blessed with natural resources in its borders, and has hundreds of millions of workers, it's unproductive. And therefore they're poor. And a big part of it is because they're poor, and this is how you have to break the cycle, because there's poor, there's no savings. Therefore, there's no investment, which means anything that got built in the 60s, so let's say the oil industry in the 1960s, okay, when Americans and the Dutch and the British were allowed to go into the post-Soviet Union and into Russia to rebuild their oil infrastructure, they found out that there was no investment because there was no money. Savings, there was no money to save, so there could be no investment because there was no money. So what happened? It all had depreciated. So the Dutch, the Americans, and the British showed up and found out the Soviets were still using 1940s, 50s, and 60s technology in the 90s. There was no investment into the one economy that was making that society money. Same thing with Venezuela. Okay, Venezuela has more oil than Saudi Arabia. But their productivity is pathetic because they were making all this money. Okay, they were making money hand over fist, more oil than Saudi Arabia. They were getting all this money and then spending it, basically giving it to people for free because there was no work outside of oil. They didn't create an economy. They just lived on the free money. Gave it to people. People spent it, didn't save it. There was no investment money, and everything that they owned depreciated. But meanwhile, the entire economy still had all that free money, which means inflation. Why do we have inflation now in the United States, even though we haven't had inflation for 40 years? Because we gave people free money. It's unproductive. It's bullshit money. And now we're paying a consequence. It's a penalty. You don't do that. Venezuela did. They have inflation. Russia is going to have inflation through the roof. Okay? So anyways, a $1.4 trillion economy globally is not a global problem. Okay? Okay? The only reason, right? It's the nukes that everyone is worried about. Well, remember that the Dutch, the Dutch and the Germans were giving free money to Greece, if you remember. The second largest military power in the world. Yeah, sure. Okay. And probably the least productive per soldier would be my guess as well. Why do they have such a large army? Because apparently they're not doing anything else besides pumping oil out of the ground. So how are you going to keep 1 million people employed? Create a big army. Okay. So of this $1.4 trillion Russian economy, 50% of that comes from Germany. So if Germany was smart, they would spend the next 10 years developing a different supply chain for energy. It could be nat gas from, liquid natural gas can come from anywhere. Canada, United States, Qatar. Okay, Bahrain has wonderful nat gas. Okay, great. It can come from somewhere else. And you can transport it on ships if necessary. You can build a pipeline to Africa, have energy that way. The French built nuclear power plants. You can do that and then get on with it, right? And then what would happen to Russia if they dropped to, let's say, $750 billion economy? Their best goal would be to kidnap Elon Musk and just for his money, right? Okay. So whatever. Just, this is important, and it's particularly important to those in the Ukraine. Strategically, it's important for, there's clearly a strategic importance for Russia to have the Ukraine as a buffer, access to natural resources. There's a lot of iron ore, coal, nickel, steel. It's the breadbasket of the world. Okay. So it's important. Breadbasket of Europe. Okay. But here's the thing. Europe, it's called the breadbasket of Europe because they produce a lot of wheat. Okay. And other grains. It does. It's huge, right? But Europeans don't buy it. Where does the wheat go from the Ukraine? Much of it goes to North Africa. So eventually it's going to suck if you're poor in North Africa. I gave the example of living in a small town in rural Algeria, and you rely on cheap Ukrainian wheat to feed your kids, and the price of that's probably up 50%. So who does it hurt? It hurts Algeria, right? Now, Egypt gets its wheat from the United States, in particular its rice. So many of you guys know that Israel receives the most foreign aid from the United States. Of all the countries that receive foreign aid, Israel by far gets the most. What most people don't know is number 2 is Egypt. And what do the Egyptians get? California rice. Believe it or not, California is a big producer of rice. Most people don't even know that, even Californians. It also receives the highest government subsidy. So a man named Charles Schwab, that Charles Schwab, he's a billionaire, lives in San Francisco, and he bought thousands and thousands and thousands and thousands and thousands and tens of thousands of acres in the Central Valley, about a 2 or 3 hour drive from San Francisco. It's big flat land. And he flooded the whole dang thing and planted rice. Now, rice, like I said, gets the largest government subsidy and support out of any commodity, even more than sugar. Because, yes, sugar is important, but it's a tiny market. But the United States government wants that rice so they can give it to Egypt for free so that Egypt doesn't attack Israel. So now why would Charles Schwab do that? Is he worried about Israel? I don't think he's Jewish. Maybe he is. I don't think so. Maybe he is. I don't know. Okay, I'm not good with such things. I don't care that much. Right? I judge people by them. So I don't know anything about these things. So anyway, why would he do it? He's already a billionaire. Okay. Well, he's getting all this free government money. That's nice. Improves the return on investment on his land. But he built it. Now get this. He built it because once or twice a year, he wants to hunt ducks. Burns says the name sounds Jewish. See, I don't know these things. I just don't know these things. I said it out loud and I'm like, wait, maybe Schwab is Jewish. I mean, I don't know. I don't even care. Who cares, right? So anyways, okay. He has this land. The land pays for itself. So imagine you got a mortgage payment. But he grows rice, water, and food that attracts ducks. So once or twice a year, this billionaire decides to go hunting for ducks. And instead of like going to some other land or going to like, I don't know what you call them, they're clubs. Here in Georgia, they have these private shooting clubs and hunting clubs. But instead of paying money, remember, rich people don't pay money. They get everything they want for free. So he owns all this land. It produces rice. He sells the rice for profit. Plus, the government gives him millions and millions of dollars a year of subsidies and tax breaks and free money. And so once or twice a year, he shows up. He shoots a couple of ducks and probably makes, I'll make up a number, $10 million a year profit. On the land he uses once or twice a year, he makes $1 million a month profit. Meanwhile, all that rice goes to Egypt. Okay? Now, here's the cool thing. The United States sells a bunch of military jets to Egypt for cheap, but because Egypt is now not spending money on rice to pay poor people their free rice, instead they take their money and they buy spare parts to the fighter planes that they don't use. And that maintenance goes back to the United States. So they get rice for free, but they're obligated to buy spare parts for their jets. Meanwhile, they've agreed not to attack Israel, which is interesting, right? Gotta love rich people, man. Some guy makes $1 million a month on his once a year weekend vacation. His guy's weekend, he and his buddies go shooting ducks. And probably, if you add it up on that one weekend, makes $1,000 a minute. You're like, this is a big weekend, man. 2 days straight. Yeah, I make $1,000 a minute doing this. Yeah. So anyways. Topsy-turvy world, yo. Yeah, Arkansas produces a lot of rice. Yes, for sure. And I would imagine it's southern Arkansas because northern Arkansas is very mountainous. But of course, if you look at, Southeast Asia, man, how they have everything terraced. It's so crazy beautiful. All right. So anyways, Bitcoin moving. And what I was saying before is the rotation in the market is not risk on. The rotation is getting rubles out of Russia. Daniel's like a great business plan. Yeah, I'm telling you. And I don't mean this in an insulting way, but I want you to think about it philosophically. Rich people never, ever, ever spend money. Okay? Rich people never, ever, 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 ever spend money. Uh-oh, I think YouTube is banning me, huh? Am I getting banned for YouTube for covering these subjects? I think we're yeah, weird. Uh-oh. Okay. Yeah, I think I've lost you guys, huh? Think so. It's my life. Yep. There you go. I think I've been dropped, and no one's responding. So right? Yeah. Well, I guess maybe that's what they're saying is it's time to go. Yeah. I guess it's time to go, eh?